Hello, this is Brian Resney, president of Resney Wealth Management, and I'm getting a lot of questions about oil and how does oil relate not only to our economy but other economies around the world, and do I think oil prices are going to stay low for a long period of time? Ultimately, supply and demand is the factor. I think there's a lot of countries outside the U.S., maybe not a lot, but a good number of countries outside the U.S. that really are going to be negatively impacted. And these are smaller countries. You know, Russia is going to be negatively impacted. It's not that big of an economy in comparison to other economies in the world. Venezuela, Brazil. So some countries will have a negative impact from these low oil prices because a lot of their economy is driven by that. If oil prices stay low like this, which they potentially can because of supply and demand and because of fracking, I think countries like Russia, like Venezuela, like Brazil really should be avoided or at least reduced exposure simply because their economies are not going to have a chance to grow, at least to the extent they once did. While valuations on those countries or those stocks in those countries are cheap, they could get even cheaper because earnings could potentially go down because it's driven by oil prices, and if that's their main investment or their main economic driver, that doesn't bode well for a lot of those emerging market economies that are oil dependent, at least on selling it. If you're not a client of our firm, give us a call for a consultation. We always like taking on new clients who are nice people to do business with and, of course, want to improve their financial situation. Have a safe and profitable day.